You don't have to be.
Hello, my name is Christine, and I'm the head of content at TulipShare.
Hello, my name is Constance, and I am the head of shareholder activism at TulipShare.
And this is our podcast, TulipShare Talks. It's a podcast about shareholder activism, which is not a new concept, but it is becoming increasingly important to society, in our opinion, as we see global corporations wielding more economic power than entire countries, while having relatively few ways to keep them in check. This is our first ever episode, so we thought we'd cover some of the basics about shareholder advocacy and shareholder engagement. So let's dive straight in. Constance, can you talk us through some of the different ways you can engage with a company as a shareholder?
There's a number of ways to engage with companies, and as a shareholder, you have certain rights. When you reach out to companies and start your dialogue, there are different ways. Obviously, post-pandemic or during the pandemic, a lot of these meetings are over Zoom. Sometimes you're lucky enough to meet face-to-face, or there's even the option of speaking over the telephone, and basically engage with the company on issues or vulnerabilities that you as a shareholder are concerned about within that company. So if you are not able to have meaningful dialogue with the company, then your next step can often be to file a shareholder resolution or a shareholder proposal. Those terms are pretty interchangeable. So if you are able to submit that proposal and the company doesn't challenge it, it will end up on the company's proxy statement. However, if the company does challenge it with what's called a no action filing or a no action request with the SEC, then you get into the territory known as a proxy fight. And that's essentially when you as a shareholder and the company kind of go back and forth with your arguments as to why or why not the proposal should be included on the proxy statement. So if you're able to succeed in that no action challenge as a shareholder proponent, then your proposal will end up on the proxy statement. So what does that mean? That basically means that during the annual general meeting or the annual shareholder meeting that each of these publicly traded companies host each year, the company will kind of give a reporting on how they did financially over the past year, and then they will go into the shareholder proposals and allow shareholders to vote either for or against. And unfortunately, a lot of shareholders don't really vote their proxy. And that's one of the goals of TulipShare, is to engage retail investors and really help them exercise their rights as shareholders.
So in summary, there are a few ways you can engage with companies as a shareholder. You can reach out to the company's investor relations team and say, hey, I have a concern. I'd like to know what the company is doing about it. And as a shareholder, they have to respond. Or step 2, if they aren't able to engage in meaningful dialogue around your concerns, you can file a shareholder proposal. And you briefly touched on this just now, but could you take us through that process? What happens when you file a proposal?
A lot of times filing the proposal can lead to dialogue. So say you weren't getting very far with trying to reach out to the company prior to filing. Filing a proposal generally gets the company's attention. So that might open up the dialogue channels. It might make them more willing to come to the table and discuss these issues with you. Or it might not. They might just go straight to filing a no action challenge with the SEC, which essentially is saying this proposal should not be on our proxy statement for X, Y, and Z reasons. And those reasons, they're generally limited to it's SEC Rule 14A8. There are certain reasons why a company can exclude a proposal. And then it's up to the shareholder proponent to then argue against whatever exception or argument that the company raises.
So you're saying companies can try to exclude your proposal from being voted on at the AGM, but even if they try to exclude it, there's still a chance your proposal can make it through onto the voting ballot?
Oh, absolutely. So a no action challenge is not the end of the road by any means. That's when the shareholder proponent really needs to dig even deeper on research and basically show the SEC all the reasons why the company's argument should not exclude the proposal.
And can you just talk us through quickly who are the SEC and what role do they play in all of this?
The SEC is the Securities and Exchange Commission. It's a government agency in the United States, and it's a branch of the federal government. It actually was created after the Wall Street crash in the 20s, and it's basically the agency's purpose is to enforce laws against market manipulation. So they are really the overseers of these publicly traded companies, and they are the agency that basically allows us to file these proposals. We're adhering to the SEC's rules, and specifically Rule 14A8.
Thank you for that. So let's get back to these shareholder proposals. Let's say that we've managed to get a proposal onto the proxy voting ballot at the company's next AGM. What do we need to do next to get support from other shareholders to make sure that our proposal gets backed by a majority?
One of the first steps, just to kind of a precursor to that, before we even get shareholder backing, is making sure that we're aligned with stakeholders who are in the know. So whether that's a community-based organization, whether that's an NGO, some type of nonprofit, there are a lot of groups, labor unions, for instance, who are really, on the pulse of these issues, and we want to elevate those voices. We want to elevate the voices of those most affected. So we look to those types of groups who have really laid the groundwork for us, and we try to coordinate with them and collaborate with them on messaging. So whether that means reaching out to media to start garnering attention and support, that's generally one of the first steps. Another facet of that is we will also be reaching out to asset managers and proxy advisory firms. So the asset managers generally are the largest shareholders at these public companies. They may hold, 16% of the shares in one company or 12% of the shares in one company. So if you can sway them and you can convince them of your arguments and they advise to vote in favor of your proposal, that's absolutely going to help. But again, we're really trying to engage the retail investors, the individuals, the people like you and me, the people all across the world who, maybe only may own a few dollars or pounds worth of stock. We want them to come to the table, because when we can elevate a large number of voices, it really gives us as individuals and activists a seat at the table with these major asset managers. And when you look at the voting results after a lot of these AGMs, it's unfortunate to see how many people don't vote. If you are a shareholder, you are a partial owner of that company, and we want shareholders to really take an active interest and see where their money is going that they're investing in.
And so can we touch quickly on what happens if your resolution doesn't pass?
If your resolution doesn't pass, there's a couple of numbers you want to keep in mind. So if it's a first-year resolution, you're looking to hit at least 5% support from shareholders. And if you can pass that 5% threshold, you can refile for the following year. And so there are different thresholds for a first year, second year, or third year proposal. But that's really one of the first numbers you definitely want to hit. And if you can at least pass that threshold, you can come back and refile again and use the year in the meantime to build even more support. Take a look back, realize what we did, what we could have improved on, and what our successes were. The work is not over, but even if you don't pass that 5% threshold, you can still file with the company the following year so long as you hold your shares. That would just really mean that you'd have to look at your strategy and regroup and maybe think of a different way to frame your proposal. But yeah, it's not over. And also, a lot of companies have taken action even if you've gotten 20% of the vote on a first-year proposal.
So the company might see a proposal get relatively large backing, maybe not majority, but enough to make them say, hang on, this looks like something we should look into because it's more important to shareholders than we realized. And that actually brings me to my next question. What happens when a proposal does pass? Because the work isn't done there, is it?
It absolutely does not. So it depends on the type of proposal you've requested. For instance, if you requested some type of independent audit, report, something along those lines, the shareholder proponent then needs to set up meetings with the company, keep the conversation going, collaborate with them, ensure that whoever this independent auditor is qualified, they know what they're doing, they have experience in this avenue, they are truly independent, and it's generally the shareholder proponent will set up quarterly update meetings with the company to check in on progress. And we like to see these types of audits or reports come out in a reasonable amount of time. Generally, a reasonable amount of time is about a year time frame. So within about a year after the AGM, we should see results if we've gotten majority backing, if the resolution has passed. Now, if the company decides not to, or perhaps they say, okay, well, we're going to unilaterally just do an in-house audit, for instance, that would very unlikely meet the standards of what the request was. And that's when we would then reconsider, okay, so which board members are really standing in our way here for progress? And that's when you would start a vote no campaign for those board members.
Lastly, I just wanted to talk quickly about Form 8K because we mention it a lot when we send out emails and updates to our TulipShare users after AGMs. So I just want to give a quick explanation of what that form is.
Yes, absolutely. So the 8K filing is a filing that the company will make with the SEC, so it's publicly available, and it's due to be filed within 4 business days after the annual shareholder meeting is held. So it's a form that's used to notify investors the voting outcome. So we'll be able to see on that 8K report which board members were voted back in or voted against. We'll be able to see the company's own filed proposals and how those were voted on, as well as the shareholder proposals. And we'll see the exact number of how many shareholders voted for the proposal, against the proposal, how many shareholders abstained from voting, and how many non-votes there were. And there's a difference between abstentions and non-votes. And abstentions can be quite interesting because a lot of times whether it's a asset manager or individual shareholders, if they're not quite sure how to vote, but they're not really against the proposal, they will abstain. And those generally are the type of votes that are easiest to flip for the following year. Maybe they need a little bit more information. We could put out more information during the refiling. But again, a really sad number that we want to see improve is the number of non-votes. And that's going to be the same number for each of the proposals. That's simply when people own shares and do not participate either in the annual shareholder meeting or vote. And by the way, you do not have to attend the meeting to vote.
That's very true. And actually, that's a big part of my job is making sure to communicate to our users when it comes time to vote that they have everything they need. But sadly, that's all the time we have for today. Thank you so much to Constance for joining us. Next week, we'll be bringing you some more news from the world of shareholder activism. But for now, thanks for joining us. And if you enjoyed our conversation today, you can always find more information on our website, tulipshare.com. If you do decide to get involved with shareholder activism using our platform, just be sure to remember that with investments, your capital is at risk, meaning your investments can go up as well as down.
Share.